Hey guys, Mike here. So, oh boy, what a roller coaster of a day. If you didn't see it, I'm going to take you through it. And like we talked about, that data that was coming out today could create some volatility. And oh boy, did it. So we'll go into the charts. But boy, look at this right here. Payrolls, they had to revise them down. Can you see it? 818,000 jobs. I showed you those adjustments yesterday. Woo! I mean, I thought Goldman Sachs was talking out their butt when they said they were going to talk about it could be 1 million. Well, they weren't that far off. You know what I'm saying? And I mean, take this into consideration. At 2 p.m., we got the Fed minutes. Look what they said in the last meeting here. You ready? Fed officials saw a case for cutting at July meeting. Vast majority saw September cut is likely appropriate. Downside risk to employment were seen as increased. That's before they knew about this revision. Some saw higher risk or more serious labor deterioration. So if they said that in July's meeting, what do you think is going to happen in September? I'm not a betting man, but I'll tell you what, if I was, I'd be pushing my chips on red if that was the rate cut. Now, we've talked about, I think either I showed the members or you guys, I think it was the members, why the market obviously cares about how big the rate cut is, whether it's 0.25 or 0.50, okay? And that's what we got to find out. And I'm telling you, it was crazy. This whole day was crazy, right? Because that news was late coming out. But I found this roller coaster here in Denver, this picture. And when you see the chart here, I'm going to show you, this is exactly what it looks like. Maybe stretching it a little bit, but that's the roller coaster, a real life roller coaster. This is the stock chart. Look at this. Whoa, my goodness. Get me off this thing. Oh my God. It's over? Nope. Oh boy, look at this right here. Woo! I mean, and what's crazy is the news was 30 minutes late coming out. We had a spike at 10 off nothing, which it gave all that back. And then you come over here, you see that big old candle right there? Within, what was that, 7 minutes, we rose up about 0.75 off of losing 818,000 jobs. So you kind of knew that had to be manipulation, right? And then within a couple minutes, down we go, 0.88%, almost 0.9% down. And then from there, we would go up and down and all over the place, just like a roller coaster. I mean, it was a very volatile day. Now, looking at the futures, you can see I'm going to keep this trend line in here for you guys. Y'all tend to like that one. We fell below it yesterday, but then we came back up and rejected off of right here. So I'm going to keep it in here. I don't use trend lines on my chart when I'm trading through the day or whatever, but it's easier for you guys to see it, and you can see some resistance there. And when you look at this, I mean, there's obviously liquidity everywhere, right? We got it to the top of us, plenty to the bottom has been left behind, by the way. And so either way, again, I'm going to show you what we're doing here. We're basically just consolidating what we're doing and kind of stuck in this holding pattern right now. But what I'm going to do is move this up right here, because obviously if you break over 20.093, boom, we're going for this liquidity up to the top, no doubt about that. And so that will be a big move for the bulls for sure. Again, I like to watch this overnight, see what's going to happen. And then with this line right here, we'll adjust it down to around 19,469, right? And so if that breaks, obviously we're getting liquidity at the bottom. But that leaves us with this big range where there really isn't too much liquidity right here, right? We got some moves to the top, right? And then we got a little liquidity right beneath us and stuff. So that's a 3% range up and down, depending on where we're going to go. But when you look at it, you can see clearly that we are sitting here consolidating, and or whatever you want to call it, but just basically in this really tight range. And we go to the lower time frame here, and it's a pretty tight range. I mean, right there, you can see there's liquidity down if we want to go and take that tonight or something, or maybe even tomorrow. But right there's the range. And you can see it since Monday. It's Monday at 2 p.m. is when it started. Right, tomorrow's going to be Thursday. And so looking at that, it's less than a 1% range. So that's a pretty tight range we're in. And so the question is, are they going to wait till Jackson Hole? We do have news coming out tomorrow, by the way, which we're going to go into, which absolutely it's something that everybody's got the spotlight on. All right, jobs numbers and things like that. But when you look over here at the SPY, the indexes, look where we're at. 562.11 was the high for today. Why is that an interesting number to me? Because when you look over here, I'm going to go back to Monday's daily news brief. That puts us above where we were supposed to be for the weekly move. And then when we go to today's new briefing right here, which should be Wednesday, I'll make sure that's the one. Yes, it is. When we scroll back down, you can see that is almost to the penny what the daily range was. That rarely happens. Normally you're going to go outside or beneath it, but almost to the penny. Okay, and so we're outside the weekly range, what the options market thought we were going to do. And we got data coming tomorrow, but then, of course, with Jerome Powell speaking Friday, everybody's looking, ooh, what's going to happen in September? Because right now it's looking like a September cut. Put in the comments what you think. But looking at those Fed minutes back in July, I don't see how they're not going to cut in September at least 25 basis points at this point in time. Now, when you look up here, you can see we filled that gap right there on the daily chart, and that happened to coincide with the daily move, of course. And we're still just in that channel, and going to some stocks that you can see. And the reason why it's a consolidation day. Look at NVDA. Right, and Tesla's going to be the same way. But look at this, just held that trend line. That's why I know that trend line means something. Okay, like above it and just bounced on it all day. And it was around like 129, I believe, was the rejection level multiple times, but it would not break down below that trend line. If it does, look down there around like between 119, 123 for it to drop. Tesla, exact same way. That trend line, which is going to be important, it seems like for a long time. Again, right there, just bouncing and bouncing and bouncing. 223.40 was like a brick wall for today. Just would not get back above that. If it breaks this trend line right here, again, I would say watch out for this area right here between like 216, 218 right there to come down. That's about a 3% drop, maybe. If not, though, again, we get some pretty good, interesting data or important data coming out tomorrow. And if the market wants to move it, obviously you can see it has liquidity above as well to go ahead and keep moving. A lot of people are picking like 235, I believe, is the magic number for this one. Amazon had a good day. Remember we talked about this gap right here like 2 weeks ago, I guess. And so, it basically almost to the penny filled it today. I almost got there. It was like, I don't know, maybe a 0.5% off or something. But you see on the daily, it looks like it filled it completely. So now we get to see, okay, filled the gap. Where are we going now? That's going to be the big question for this thing. And when you look, it's stuck. It's wedged right between the 50 and the 200. Okay, we have not tested the 50 yet, so that will be a test. You can see it to the left. It's failed a couple times right there. So again, 183, 185, somewhere in that range. Watch for that to be rejected or successful breakthrough. And if it does fail and get rejected and slap down, then expect this one to come back down probably to that 200. Because there's a gap there where the 200 is going to meet it, so that will be a perfect move back down. Because this has been, for Amazon, this is a big move. Amazon is not a big mover. Okay, guys, I've showed you this many times in the past. Out of all the Mag 7, this is one of those ones, it gets kind of a flurry up, and then you'll get this consolidation for like days and days and days. You can see on the chart, it's not an NVIDIA, it's not like a Tesla or anything. It's kind of like Google, right? Google and maybe I'd say Amazon move a lot alike, right? Where they're just not these high flyers, okay? And this one's being picked to go to all-time highs by a lot of people, okay? And I think maybe because, again, you get consumer staples out of it, all kinds of fun stuff, and they have different kind of business like the cloud and everything. So maybe that's why. Now, Shop completed this gap right here, like we talked about, and so congratulations for those who held, if you had your calls, all that good stuff. I know a lot of you reached out to me, so I'm happy for you. But now it's at the 0.79 level right there, as you can see. And so, again, this is where normally, okay, you fill a gap, you get the 0.79 fib, which is a huge fib level. That's usually where you're going to get a pullback. But again, I'm actually going to move this trend line up because this will be your next one, 77.26. Is that what that is? If it gets above that, obviously, we can continue to move. But you can see what I'm talking about. Pull the volume profile up. There's a lot of interest right there, sitting and waiting right there. That's where a lot of volumes come in before in the past, a lot of sellers. And so watch out for this area right here. It's a big area, as you can see. Again, what will be good for this one, because this has been a rocket ship up. You can see on the chart right there, just nothing but a rocket ship up since earnings. Okay, huge gap below, a bunch of gaps left behind. Don't mean they got to fill. But if it did come back down, you would think the obvious place for it to retest would be the 200 moving average. I'm going to zoom in. You see it right there. Also aligns with your golden pocket fib. So that would be good. That's not bad. It's not a bearish thing or anything. Look at that. That's straight up. It's a cliff. Okay. One I hadn't talked about in a long time, still sitting in stage one, is roadblocks. And the reason why I talked about this one, because it hadn't approached this all-time high anchor VWAP, but you can see slap down. And it's been just absolutely crushed when it hits this anchor VWAP almost every single time. That's not a big enough arrow. Let me put a big one. There you go. Every time. And it's been in stage one going all the way back. Look at this thing. Ugh, it's a mess. And it's just been slapped down every time it hits this anchor VWAP. But been in there since March of 2022 in stage one. So many stocks have broken out. Even Chinese stocks started to break out their stage ones, and this thing is a mess. But if it ever does break out, you can see there is a big old gap right above. $60, I believe, where it would start. And so you could have a huge move up. But this one, man, you got to think at some point in time, somebody's got to give it some love. But this lets you know that the institutional buyers aren't buying in on this one. This is just nothing but retail on this one. So if you get institutions, you're good to go. Now AMD real quick, I'm surprised it didn't get slapped down harder because they did have news coming out saying they had delayed part of the motherboards to early 2025. Normally they go, oh my God, how are you going to compete with NVIDIA about that? But actually, it really did phase it today. It came out today and it's like, whatever. But you can see it's just jam right here, right? So it's up against 100, so it has the 50 support, up against 100, on top of the 200, all those moving averages in one area, converging right there, which usually means you're going to get a big move. So watch out for AMD right there. I mean, it definitely could use some consolidating or pullback right now. It's had a huge move up. Now, crowd and all these different stocks, you can see even with days like today, red days, been talking about these. These are continuing to move up almost every single day, it seems like. But, CMG is kind of all over the place. And it's up against the 200. Can you see the 200 right there? So it's up against this 200, which got rejected to the left right there, as you can see. But you got Nike. Again, what's crazy about this is you're talking about stocks. And again, who's this? Nike, and there's a triple bottom. Sorry, beat that out. But you're talking about stocks like Nike, Lulu, I'm finna get to. A lot of stocks where nothing has changed, right? Nothing has changed, right? And they're moving up. So what's it tell you? What it tells you is, let me get through these real quick. Lulu finally hit a bottom. Okay, I mean, it looks like it finally hit a bottom. But again, it had to go all the way back to 2020 to find the bottom, right? And it's had a decent move up. Again, you can look at Nike, look at Lulu. Okay, look at these other stocks. Snow's actually getting hammered in after hours. But we'll see, what the morning, because they reported earnings right now. We'll see what opens up in the morning. Disney's another one. And here's the thing: you got to ask yourself, has anything fundamentally changed? And the answer is no, right? It's just it shows you Wall Street loves beating down stocks. Absolutely love them. And loves to pile into them and push them up. Does that mean they're going back to all-time highs? No, because it's really stuff you don't need, right? And a lot of it. And so we'll see where they go. Now, when you look over here at earnings, again, we had Target come out today, up huge. Macy's dumped. TJ Maxx had a really good earnings. Obviously, Snowflake's getting beaten after hours, but you look at the ones coming tomorrow, and you got Baidu, BJ's, Advanced Auto Parts, Workday, Bill.com, Intuit, Ross. And so we get to hear from more retailers, but then the important news coming out tomorrow is going to be unemployment claims, going to be watched like a hawk. Flash manufacturing PMI and services PMI is going to be coming out. Existing home sales, which we assume is going to be hot garbage, especially when we saw this data right here saying that home purchase fell through at the highest July rate on record. Okay, so 16%, which I can attest some neighbors have been telling me about. They've been trying to sell their home, and boy, they're dropping the price and everything, and it is tough to find a buyer. Okay, the prices are so high, the rates are coming down, but they're still so high. So again, we don't expect anything great out of home sales. I wouldn't believe, to be honest with you. And it's going to be interesting to see what rate cuts do, because with rates drop, people think the prices are going to go back up, right? Because demand, they think, is going to increase. And you can see right here just how bad the housing market really is. I thought it was worse than this. They're projecting about 5 million homes to be sold this year. You can see usually it's between 5 and 6 million, about 4.76 last year. I don't think we're going to hit the 5, by the way. Let me know if you think we are. But this is, again, one of the things that is saving this market right now. You know what I'm saying? I mean, that's just the truth, because remember, ask yourself this right here. If you're one of those people who's going to buy a home and you didn't, what did you do with your down payment money? Where did it go? I'm curious. Did you spend it on vacation, or did you put it in the stock market, or put it into a CD, or maybe some bonds? That's what I want to know. Or if you know somebody that was going to purchase a house and didn't, where did the down payment money go? Because you're talking about hundreds of thousands of people. Instead of putting down, let's just be really conservative, $10,000. I think it's more like $20,000, honestly, or 30 or 40 for a down payment. But let's just put it that way. You're talking about billions of dollars that didn't go to purchase a house, that is either sitting in the stock market, sitting in the bond market, or got spent out on some heck of vacations, I guess. But let me know in the comments if you were one of those people or know somebody and what you did with that down payment. Because to me, I've always said for 3 years, this is one of the things that are keeping the market going and keeping people to be able to pay off those credit cards, guys. That's what my firm belief is, okay? And so again, hope you got some out of it. Hit the like and subscribe button if you did. I love seeing your predictions at the bottom, what you think is going to happen in the market tomorrow. I definitely think it's going to be extremely volatile, especially when unemployment claims in at 8:30. You're going to get one of those FU candles for sure. But I will be here to report it. Feel free to put any questions you have for Saturday's video in the comments. Feel free to sign up for the membership right down there in the bottom. Less than McDonald's combo. There's all the stuff you get with it. And I will see you tomorrow.